We're analyzing Energy Transfer, stock ticker ET, to see if this is a great business on sale. This analysis is just over 10 minutes. It's going to be intense, but it's going to be worth it. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for Energy Transfer. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing Energy Transfer for your stock portfolio. Before we get into these valuable metrics, let's understand Energy Transfer stock performance. Right now, Energy Transfer trades for $13.03 per share. Year to date, their stock price is up 12%. Right now, Energy Transfer pays a huge 8.53% dividend yield. Their average dividend yield is in addition to their returns. In the last 5 years, Energy Transfer stock price is actually down 25%. In the last 10 years, they're down 20% overall. Going back before the global financial crisis, Energy Transfer stock price has compounded at about 5% annually. Their average dividend yield throughout this time is added to the returns of their stock price. Energy Transfer trades just under its 52-week high. The company's up $4 from its 52-week low. Not a lot of difference between the high and low for this business. Just under 2% of their shares are sold short. Energy Transfer is a big business. They have a nearly $41 billion market cap and about a $103 billion enterprise value. But the burning question is, why should we be paying close attention to Energy Transfer? Energy Transfer owns a large platform of crude oil, natural gas, and natural gas liquid assets, primarily in Texas and the US mid-continent region. It also has gathering and processing facilities, one of the largest fractionation facilities in the US, and fuel distribution. Energy Transfer also owns the Lake Charles gas liquefaction facility. It combined its publicly traded limited and general partnerships in October of 2018. We'll see that affect their share count later in our analysis. Energy Transfer is owned by some very famous investors. Based on what shows up in their 13F filings, which details US listed holdings, David Abrams, David Tepper, and Bill Miller all have decent sized positions for Energy Transfer in their portfolio, with it making up about 7% of both David Abrams and David Tepper's portfolio. Now with this understanding, let's get into the numbers. Metric number 1, we want Energy Transfer's average return on capital in the last 5 years to be above 14%. The average business earns about 7% returns on capital. Looking for a benchmark that's double this can build in margin of safety based on the quality of the company. It would be difficult for Energy Transfer to hit this metric as the company has a huge amount of fixed assets. These tend to be more highly levered, so while Energy Transfer does earn a high return on equity, they earn just above average returns on capital. Throughout these 5 years, Energy Transfer averages about 8% returns on capital in a given year. Not a whole lot of fluctuation between this. These haven't changed by much, going from just under 7% in 2020 to just over 9% in 2021. This is just slightly above average, meaning it's down from the benchmark we're looking for. This is an X on metric number 1 for Energy Transfer. Metric number 2, we're looking for growth in the business. Usually we're looking for revenue, net income, and free cash flow growth. Because Energy Transfer has been a master limited partnership, their revenues and their net incomes or their earnings aren't going to be as valuable here as they would be for some other companies due to the nature of their business and how these are reported. Really, we're looking for free cash flow growth in this metric as that MLP. That's what we'll be assessing Energy Transfer on here. Energy Transfer has taken their free cash flows from being negative in 2018 to generating about $5.7 billion worth last year. In their last 12 months, they produced about $6.5 billion worth of free cash flow. This has grown by a lot, meaning this is a check on metric number 2. At the same time, Energy Transfer's revenues are up 63% and their earnings are up more than double. Metric number 3, we want their shares outstanding to be decreasing. This again will be tailored to Energy Transfer as an MLP. They combined their limited and general partnerships in 2018. This is why their shares are up so much. However, even from 2019 until today, Energy Transfer has diluted shareholders. With more shares outstanding, this is an X on metric number 3. Metric number 4, we're putting our previous metrics together. Here we're looking for free cash flow per share growth in the last 5 years. Even though Energy Transfer's diluted shareholders over this time, their free cash flows have grown by a lot. They were negative in 2018 and they're pretty positive today. Energy Transfer's free cash flows per share are up. This is a check on metric number 4. To recap where we stand currently, Energy Transfer has 2 checks and 2 X's through 4 metrics. During recessions, overly levered businesses can have the greatest losses. In metric number 5, we want Energy Transfer's net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of the free cash flow Energy Transfer's generated in the last 5 years. Due to their large amount of fixed assets, Energy Transfer uses a lot of net debt in their business, more than typical companies. This may or may not be an issue. It's more dependent on the assets the company owns and the industry that it's in. They have brought their net debt down somewhat over this time. They ended their last year with just under $49 billion in net debt. Currently, they have $47 billion. In the last 5 years, when we add up their free cash flows, Energy Transfer's produced $18 billion worth of free cash flow. That's less than half of their current net debt position, meaning this is an X on metric number 5. Dig into Energy Transfer's filings to see how their debt is structured to understand if this could cause issues for the business. Another thing to point out here as well is how this free cash flow number is calculated. Free cash flow is cash from operations minus capital expenditures. Energy Transfer is somewhat unique in that they break out their maintenance capex. For the company's free cash flows, it may be more accurate to calculate this as cash from operations minus maintenance capex, although you do want to do your own work to understand if this distinction between growth and maintenance capex is accurate or not. We're still going to stick with their free cash flows using their total capital expenditures, as that's ultimately more conservative, but that's something to keep in mind, that the business may generate more cash than we're giving them credit for. We'll consider that when we estimate a fair value for Energy Transfer, but first, it's time for our bonus. As our bonus, we're looking at Energy Transfer's dividend profile. Right now, Energy Transfer pays a huge 8.53% dividend yield, but people make mistakes all the time by blindly chasing dividends. We want Energy Transfer's dividends to be supported by their free cash flows. That's been the case in 2 of these 5 years. Those are their 2 most recent fiscal years. Energy Transfers also reduced their dividend over this time, although they did increase it in their fiscal 2022. Right now, they have a reasonable dividend payout ratio. While this is a snapshot of their last 5 years, this is no guarantee for the future. It seems Energy Transfer currently supports their dividend payouts. This is a check on our bonus. The big metric of them all, metric number 6, we want Energy Transfer's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a fair value for Energy Transfer. Right now, Energy Transfer has a $103 billion enterprise value. This looks at both their market cap and their net debt position. It offers a picture of Energy Transfer similar to it being a private business. In the last 5 years, we learned the companies produced $18 billion worth of free cash flow, meaning in an average year, they produce about $3.6 billion of free cash flow. When that's divided by their enterprise value, we get about a 3.5% average free cash flow to enterprise value yield. On a current basis, Energy Transfer produced $6.5 billion worth of free cash flow in their last 12 months. When that's divided by their $103 billion enterprise value, we get about a 6.3% current free cash flow to enterprise value yield. They're average just under the yield of the 10-year treasury, while their current free cash flows are above that and above the risk premium. Because we're looking at an average here, for Energy Transfer, this is an X on metric number 6. Don't just throw the business out. We still want to estimate their fair value per share. Again, we're using a more conservative calculation of their free cash flows. If you're looking at their cash from operations minus just their maintenance capex, Energy Transfer's yields would be well above the benchmarks we're looking for. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Energy Transfer, which takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of Energy Transfer's last 3 fiscal years worth of free cash flow, then using historical assumptions to project these into the future. It's up to you to figure out if these will be accurate or not for the business. Some of these assumptions may be off because Energy Transfer has a low degree of business predictability in their past. That's partially due to their general and limited partnership merger in 2018. It's also the reason we won't be adding in their tangible book value. If we assume their free cash flows decline at 3.5% annually over the next 10 years, then in the following decade, if these decline by about 5% annually, if we want a 15% rate of return, which is what Warren Buffett's looking for from his investments, From today's valuations, an estimate of Energy Transfer's fair value per share is around $9.60. That's just slightly above the company's 52-week lows. It's well within the range some of these super investors may have been entering into the business, but it's down $3 from the company's current stock price. There has tended not to be a lot of volatility in their stock price. Please keep some key factors in mind. Again, Energy Transfer's numbers here are skewed based off their partnership merger. This discount rate is an estimate of total returns to shareholders based off their free cash flows. It's including both stock price appreciation and their dividend yield. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our final rating to Energy Transfer, but we need to address something first. We've covered the numbers, but the qualitative factors for Energy Transfer may be even more important. What are they? Well, let's find out. Looking at the factors supporting a long thesis, number 1, Energy Transfer is well positioned to benefit if natural gas liquid exports grow. Number 2, Energy Transfer is diversified across markets, commodities, and geographies, giving the company access to many large customers. Number 3, Energy Transfer's consolidation in October of 2018 reduced the company's cost of capital and helped fund its growth projects over the last few years. But we'd be remiss if we didn't cover the negatives as well. Looking at the factors supporting a short thesis, number 1, rising interest rates could make Energy Transfer's distribution less attractive as a fixed income alternative and raise the company's cost of capital. Number 2, Energy Transfer has historically been active in the mergers and acquisitions market, exposing the firm to the risk of overpaying for growth as the enabled transaction demonstrated. Number 3, a long-running legal battle threatens to halt operations on the Dakota Access Pipeline, demonstrating the substantial legal and regulatory risk Energy Transfer faces. There you have it for a balanced perspective of some of the qualitative factors of Energy Transfer's business. Now it's time to give our rating. In analyzing Energy Transfer, stock ticker ET, we learned this MLP earns just over average returns on capital, but above average returns on equity. While earnings and revenues aren't as significant for this type of business as they are for other companies, those are up. More importantly, their free cash flows are up over this time, both when using a more and less conservative calculation of them. This free cash flow growth outpaces their shareholder dilution after their partnership consolidation. Energy Transfer uses a lot of debt in their business that may be more than their cash from operations can handle. You'd want to dig in farther to understand if that's going to be an issue for the company or not. Energy Transfer currently supports their dividend payouts, but they haven't in all 5 years, though they've been doing that recently. It's worth reiterating this analysis is not financial advice. Energy Transfer's free cash flow to enterprise value yields are split on either side of the risk premium we're looking for. These may or may not be attractive compared to the yield of the 10-year treasury. When we performed our discounted cash flow analysis, if Energy Transfer's multiples are the same 20 years from now, you believe those assumptions and you want a 15% rate of return, an estimate of their fair value per share is around $9.60. That's near their 52-week lows. Energy Transfer last traded at those levels in July of 2022. That price is in line to where some of these value investors may have been investing into the company. When we look at all the factors of our analysis, Energy Transfer looks like a moderate candidate for further research. If you enjoyed today's video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts about Energy Transfer, and let me know what business to look at next in the comments below. Thanks for learning about Energy Transfer with me, and have a great day.